and some people have been doing some math on cycles. They estimate that each secular bull market movement is around 17 to 18 years. They say we've been in a secular bear market in real terms, that is, by measuring the inflation adjusted nominal prices in terms of gold. So if you price, for instance, if you price the indexes in US dollars, you will see one thing. If you price the indexes in gold, or even in terms of the CRB index, that is an index that tracks over a dozen of commodities, you will see that story very much changes. I can tell you that in terms of gold, the stock markets have been in a bear market since 1999. That's true. The 2003 to 2007 bull market, which we've been seeing in nominal terms, that is in terms of points, in terms of dollars, didn't actually exist in terms of gold. And that's very much significant. At least if you believe that real money is gold. But anyway, or things with real value like fruits, commodities, energies, metals, cereals, and grains. Okay, so you gotta watch out for that. You can't base your trading on that unless you intend to invest for 30 or 40 years. But it should be wise to notice that yes, we are in a very wide and very prolonged upward leaning channel, and we are in the top, near the top of that channel, and that is a dangerous thing to point out. Also, the valuations in gold or in commodities, you should notice that before you start saying, yeah, we've been in a bull market because the Dow has been increasing in terms of points. Yes, but that doesn't really account for the inflation, is it? Even if it did account for the official inflation, what makes you think that the official inflation is the one that the government tells you? What the hell does core inflation even mean? Do you function without energy or food? Those are probably the most important items. But anyway, I even encourage you to visit a site called Shadow Government. Okay, it kind of analyzes the government's economic statistics, and well, it makes projections based on those statistics, and they rarely match unless you put like a margin to the upside to the projected statistics, and those are very much pessimistic in nature. That leaves us to know if they're realistic by being pessimistic or not. What matters is being realistic, of course. So, always focus. Always focus, my friends. We are in dangerous times. I don't know how the stock market will be in 1 year. No one knows for sure. I can tell you that in real terms, it will be in crapola land, because there's no way the possible and improbable increases in the stock market prices will ever account for inflation, which will be surging. We are in a deflationary period right now, but we are coming to a point of unsustainability where commodity prices will start rising again like crazy. You see, pumping dollars isn't exactly the best solution for inflation. I guess you can think that because you are in a short-term deflationary period, and that kind of relates to dollar strength, and this dollar strength is a very, very hard to understand phenomenon because it has multiple components. Essentially, the dollar is increasing because there has been, since July at least, much more demand for dollars. So why are we seeing more demand for dollars? The explanations are varied, and I can't point one single factor. Some people are mentioning that people have been liquidating their assets in the stock market. Of course, we've been seeing that, and they have been investing them into long-term government debt, treasuries, 30-year bonds. That will make the demand for dollars higher, of course, for those bonds. And some people are pointing out China. China has been hoarding dollars to not let the yuan appreciate, and also to protect their exporting businesses. So there you have it. At least two factors that have been. Some people are even they're pointing out the obvious, that banks are hoarding cash, so they're not actually very keen on lending US dollars to foreign investors and stuff like that, and as the majority of countries, like for instance the emerging markets, don't really have swap lines with the Fed in terms of dollars, they must lend to their banks, the central banks, must lend to their banks using their own foreign currency reserves. This is no problem for European or for Bank of Japan and stuff like that, because they do have those swap lines. But anyway, China, for instance, doesn't have those issues. It has well over $1 trillion in foreign exchange currency, closer to 2 trillion, I think. So they can even be competing with the Fed in terms of dollar lending. Actually, been witnessing some reports of Gulf states and stuff like that actually borrowing money not from the Fed but from China. So it's huge reserves. But anyway, what I'm trying to say is that those banks in emergent markets have been trying to hoard dollars too. They're having problems getting them from U.S. banks. Anyway, once the dollar tanks, and it will happen, it's just a matter of how, of when, you will see tremendous gains in gold. Gold has actually been increasing in value in all the other currencies. Yes, the only currency that hasn't been translating into price appreciations for gold is really the dollar. Gold in dollars has been tanking. Not in other currencies. That's due to dollar strength, of course. Also the oil price in terms of dollars. Of course in terms of other currencies too, in this case, but due to dollar strength has been also on the downside. Well, but as inflation starts to pick up, this means as the dollar starts to lose the high demand it's been seeing since July, I don't even want to think about what's going to happen. But it will be bad. It will be bad. So, I wish you all good trading, good investing, and happy times. See ya.